Hello and welcome to the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Alan Bush, our senior financial economist, and Mark Soderberg, our senior ag market specialist. Let's start with Mark. Mark, were there any major surprises in last week's USDA reports?
Well, to me, the biggest surprises were the degree to the production cuts for both U.S. corn and soybean production. The USDA lowered their corn production forecast by 200 million bushels to 13.73 billion versus expectations of very close to unchanged. We had expected a modest increase. As we expected, we did see a slightly higher national yield for last year's crop. However, there was a 1.6 million acre reduction in harvested acres, and that's what really drove the lower output. Now, why none of this big drop in acres was not discovered in the November production report has left many of us bewildered. And much of the reduced supplies from the production cut, however, were cut in exports, which did leave ending stocks at 1.24 billion bushels, pretty close to expectations. And soybeans production was cut 70 million bushels versus expectations of a modest increase. And much of the reduced supplies there were also offset by lower exports as well, keeping ending stocks just above 200 million bushels and just above pipeline minimum. And now it's really a function of the market to keep prices at a level that will keep usage levels at or below the recently revised USDA estimates.
Okay. So, with the USDA reports behind us, what will be the primary factor that drives prices for this week?
Well, without a doubt, it's going to be weather forecasts out of South America, in particular Argentina. While the USDA did lower their production forecasts for both corn and soybeans last week, they do remain well above estimates coming out of South America. Plantings have been delayed and drawn out as a result of the prolonged drought. The early planted crops are off to a historically poor shape, triggering these lower production forecasts. But moving forward, we do have better prospects for rain in the forecast for late this week, and once again by the early middle part of next week. So I think there is still time to achieve production numbers close to the USDA numbers. But however, on the flip side, if rains are proved once again to be disappointing, I think soybeans are going to be challenging their contract highs here from last summer, while spot corn prices back up near that $7 figure.
And finally, Mark, what is the latest from China on their recovery from COVID lockdowns?
Well, for all of 2022, the Chinese economy grew at a 3% pace, which was slightly better than expectations. Forecasts for this year do see some improvement there in the 4.5% to 5% range. As overall growth just slowly improves following the lifting of the COVID lockdowns. This weekend, it was actually revealed that the Chinese population fell by 850,000 people. That's the first decline in their population in just over 60 years. While at the same time, pork production last year actually rose by nearly 5%. So how this all transitions into commodity demand in 2023 is going to be a big factor in agricultural price discovery. The USDA did lower the Chinese demand by 2% of soybean imports in last week's report. And I believe there could be further cuts to come as their economy just struggles to gain traction here in the early half of 2023.
Well, thanks, Mark. Moving over to Alan. Alan, what reports are likely to have the most market impact for this week?
Okay, well, it looks like the most potentially market-moving reports are due on Wednesday. We'll have the December Producer Price Index estimated to be down 0.1%. Also Wednesday, we'll have December retail sales expected to be down 0.8%. And then also on Wednesday, we'll have the Fed's Beige Book on the economy. That's an afternoon report. And this book is produced approximately 2 weeks before a Fed meeting. Of course, this next Fed meeting is February 1st. And on each occasion, district banks compile evidence of economic conditions from the 12 Federal Reserve districts. So this will be a very important report as far as the Fed's assessment of how they see the economy.
Next question for you. Will Federal Reserve officials' comments remain hawkish?
Yes, they will. The Fed has a tendency to recently be hawkish on balance, and they have the latitude between meetings to advance a monetary agenda. In this case, I think they're going to remain hawkish. However, they have to become more tuned to what the economic conditions are at the Fed meetings. But in between meetings, they do have the latitude to say what they want. But in this case, I think they're going to remain hawkish. In fact, the 6 Fed speakers this week, I think, will have comments that suggest the Fed will be raising rates 1 or 2 more times in the first quarter. So look for hawkish comments. If there are hawkish comments and the stock index futures come under some pressure because of them, that would be a buying opportunity for the stock index futures. So we'll see what they have to say. What speakers are likely to be a bit aggressive on the hawkish side.
Okay, and last question. Will stock index futures hold up despite recent weak earnings reports from the banks?
Yes, I think they will. We had 2 big banks reporting rather discouraging results this morning. Futures did react and came under some pressure, but since then they have come back to become more mixed. Also, stock index futures in recent weeks have tended to overperform the news or really not break too hard on bearish news. So I think we'll see a further recovery in stock index futures, and also the technicals still seem to be very supportive.
Well, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.